Hi, my name is Mary Pearl Pariado, and I'm your course tutor for corporate financial analysis. In this session, we'll be dealing with profitability analysis. And by the end of this session, you should be able to explain the meaning of profitability and also discuss the two main activities of businesses that cuts to the core of profitability. So profitability analysis is one of the tools management use in planning. Like we always say, proper planning prevents poor performance. Now it can be also used as a means to determine what kind of strategy would be best fit for the company and also to aid in decision making as well as valuation. Now, what exactly drives profitability? And how will profitability of the company change as a result of a particular decision that has been taken by management of the company? And then how would this translate into value that is created for shareholders? All these will be discussed in this particular session. Profitability is simply the ability of a company to earn income. And by income, when it comes to the statement of financial position, it's when the company has high net assets or the net assets of the company exceeds the net liabilities of the company. Or when it comes to the income statement, it is where your revenue exceeds your expenses or your cost. Now, the ability of a firm to produce return on its investment based on its resources, especially when you have to compare it with alternative investment, is what we term as profitability. So usually you realize that profitability is measured using the net profit or the net income of the firm. And that is a very significant measure of profitability. So as a business, how are you able to earn profit? Either through the sales you generate or through the ability to use your assets to generate more returns. Now, when it comes to profitability analysis, it's just the study of the drivers of return on equity. So it helps in determining the future direction of the company because it establishes the position of the firm currently. And as they say, proper planning prevents poor performance. So it helps you to plan into the future and determine what direction the company will be taking in the future. Now, when we look at the core activities of the company, we have operating activities and financing activities. Like I mentioned earlier on, when it comes to the income statements, when your revenue exceeds your cost or your expenses, then we say you have earned profits. Okay. So when it comes to operating activities, these are activities that earns revenue for the company. So they are the primary activities or the major revenue producing activities of the firm. So, for example, when it comes to the sale of goods, the rendering of services, or when you have to pay for expenses, or when you receive cash from your debtors or you have to pay your supplies, those kind of primary activities that involve the earning of revenue is what we term as operating activities. And these are the activities that generate revenue for the company. We also have financing activities, and these activities report the changes in the size and comparison of shareholders or owners' capital and debt of the enterprise. So, like I mentioned earlier on, you can say that you have become profitable when your net assets exceeds or when your total assets exceed your total liabilities, and that is when you can increase the share and the capital of your firm or of your business. Now, when it comes to the basic accounting equation, we made mention that assets is equal to capital plus liabilities. In other words, capital is equal to your assets less your liabilities. So the more assets you have, that means your capital as a firm would increase, and therefore you'll be able to increase the return on your equity or in other words, your shareholders' equity or returns would increase. So such activities that can be related to financing includes the redemption of the debentures, cash proceeds from issuing shares or other instruments. So in this session, we discussed that there are a number of activities that cuts to the core of businesses, and those includes operating activities and financing activities. We also explained what profitability is, And we also explained that profitability analysis is very necessary in situations where you have to plan for the future direction of the business. Thank you.